Good morning, traders. It's 8:01 a.m. Chicago time, 9:01 Eastern on Wednesday, the 25th of January, 2017. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. I'm going to make this quick today. Not much to report after yesterday's run. Yesterday's run was one that I discussed over the last, week and a half or so. But I will go over the market profile chart that shows the consolidation. I want you to remember the view of what things looked like before the breakout happened. This is an important thing that I keep trying to emphasize. The auction and the way it balances and goes into imbalance, and how aggressive that can be. As far as what we're looking for in the overnight, the main release yesterday, during the overnight session here in the U.S. is the France January business confidence came in at 104 versus 105. Manufacturing confidence is 106 online, and in the German IFO, business climate came in weaker at 109.8 versus 11.3. Current assessment is 116.9 versus 117. As far as what we're looking for today in the releases, we've got pretty much limited economic activity. The crude oil number is expected today at 10:30 Eastern, expecting 2.25 million barrels in surplus, expecting a deficit of 300,000 barrels, expecting a surplus of 1.25 million. Compare the numbers. Again, crude oil 2.25 million surplus. The prior was 2.347 million surplus, and distillates 300,000 deficit. Prior deficits 968,000, and then gasoline inventories. The expectation is for 1.25 million surplus. The last surplus was 5.951 million. It's a big difference there. As far as earnings, last night or in the morning session here, we got Boeing reporting $2.47 versus $2.34 estimated, and it missed its revenue line by 100 million. Came in at 23.3 billion versus 23.4 billion expected. Let's move on to what was expected yesterday. Now, you have to ask the question, well, how can you not see the rally come yesterday? Been talking about this compression for so long. Why wasn't I able to predict that yesterday was going to be a breakout day to the upside? Now, the fact that it was a breakout day to the upside is something that I've talked about. The probability was overwhelmingly on the side of a breakout higher. And I talked about how the market kept dipping and bouncing up, dipping and bouncing up. So as you go back and look, you'll see that these recordings are pre-market, they're not edited or changed or anything like that. They're there, and you can go back and review them. The fact is this: I'm a trader. I'm not an oracle. I'm not looking to make a prediction on when the market will do what it needs to do. It's just it's not possible to do that. If I could do that, then I would be doing something different. The fact is, we have to, as traders, we have to go on the assumption that the market continues to gyrate and do what it does until it doesn't, and that results in a loss generally. Because you're looking to trade, for example, this primary hypo, you're looking for a test up from where we were, a poke through yesterday's high, and then for the market to fail back in. And the market doesn't fail back in, and that gives you an idea that, hey, there's a considerable amount of strength here. We're breaking away from the consolidation. Stop shorting. But you still have a loss on your hands. So yesterday's primary hypo is the same old thing. Check prices upwards, find sellers, rotate back down, move all the way down to your prior day's point of control after touching the close, and then rotate in the middle, right? And so that's the primary hypothesis based on everything we've done over the last few weeks. The next hypothesis is it doesn't test up. First, it tests down. It can move down as far as 2256.50, and then I'm looking for it to rotate back up and finish somewhere around the 2265 area. Neither one of those would played out yesterday. What did play out is this. Market opens, moves down to the prior day's close, touches it, and then we start this pretty one time frame rally all the way out into new all-time highs in the ES. And we've broken away. We've finally broken away from the consolidation we've been in for quite some time. So you look at all of this. This is since the beginning of December. We have been consolidating for quite some time. So if we look at the action here, we broke out on December 7th, which is when my composite starts, micro composite starts, this thing here. And we've been consolidating sideways, and in the most recent past, we've been forming a pretty large triangle here, and we were looking for the break upwards. It's just a matter of when was it to be expected. Okay, so yesterday we had a breakout, very important day. The volume was not as great as we would expect on a wide-ranging day, but that is normal for a rally. I mean, in a rally, you're going to have the VIX falling, so the VIX dropped yesterday and was trending down most of the day. It reached almost 11, and we're going to have volumes being kind of mediocre. So you could see yesterday's volume was actually lower than the prior days, which is a test lower and push back up. The prior day's volume was 1.24 million. Yesterday's volume was 1.13 million, and the normal volume is around 1.05 million contracts in the day session. This is just RTH. I'm not looking at the entire session. Okay. And then the range expanded, but the range yesterday was only 18.5 points. By contrast, the day before, which tested down and back up, had 15.75 points. The common range is 13. So yesterday we only had 5 points above what is common, and we have broken up to the upside. And with the point of control finishing near highs, so you can see here the point of control, actually we can see it a little more in a little more detail in our trigger chart. You could see here the market put in a high kurtosis HVN on the high side. We're outside of the IB. The IB is very small yesterday. This is a typical trend day. Just the positive rotations continue to be bigger than the negative rotations. We have the high volume node pushing against the upper end of the profile, and we're looking for the LVN to hold overnight or to be tested overnight. The LVN coincides with the 2016 high, which was the prior week's high at 2273.25, and then for the market to make an attempt to push higher, to continue higher. As long as we have a point of control near highs, there's a better chance that it would continue higher than for it to fall. It's just the path of least resistance at that point. In the overnight session, we managed to push all the way up to 2285. Note that yesterday we have measured, those who've asked about measured moves in the past, note the confluence of measured moves that was present between 2278.50 and 2278.75. I put the dates for how these moves have been computed, and you see here that we had basically the market holding before it poked through the measured move. I use those as targets, not as areas to get in. The next measured move up is 2285.50, and the market stopped at 2285 and is holding steady up there. The market is in a risk on stance this morning. Um, Most of the indices are stronger. The DAX is up 210 points today, 210 points, up 1.81%, followed by the Euro stocks up 150 basis points. Basically, that comes out to 50 points in the stocks, followed by the Russell, Nasdaq, Dow, the S&P, and then we go on to the um, uh, protection or risk-averse um, instruments, and those are negative, starting with the 10-year Treasury note, followed by the dollar, the bond, the euro bond, gold, and then crude at the bottom of the pack. Crude is trading lower by about 50 cents at 52.69 or so. It's down 1%. So that's the stance of the market that risk is on. What we've done, so that's great. Yeah, this is history. Everybody's got charts, hindsight 2020 and all that. The way the market has been putting in highs, so if the market finds itself in general, if the market finds itself, and let's go back here a little bit and look at a similar point where we rallied and closed strong. So December 7th, we rallied and closed strong. That is this day here. You could see very small IB consolidation, and then the market breaks, and then you have this VPOC near highs. Same thing as yesterday. When the market closes strong and it continues overnight, it generally holds those prices higher the next day. You generally get the continuation move the next day. If it closes strong and then the next day you have a gap down below the high volume area, then the market struggles to get back up through to the high price. So an example of that is right here. Is this 2277 double top. The market did its thing. It rallied. It had a lot of volume near the top, but look at how it closed. It closed weaker, and then it reopened lower, and it just stayed below. See, we tested this point of control to the tick there a couple days later, but overall the market stayed weak and continued to explore lower. The stance of today is that we're likely to get continuation or a continued bid under the market for today to do the continuation move. So what we have is something that looks like this. Then it's likely to get toppy, and then you have the reversion back potentially. So today, I'm likely to trade both ways with a bigger emphasis on buying dips rather than selling pushes to new high. This is new all-time high territory. It's dangerous to sell and hold. And you know, if you want to be a top picker, help yourself. You're welcome to do that. It is just, to me, it's not a sustainable way to trade. It's not a sustainable business plan or trading plan. So for today, if you've got, if you've got some price action or, or order flow type of reasons to get short against an area, against a known area, for example, this high volume uh, offer here or something, some reason to get short up here, and you want to take a stab at it for a quick scalp, great. But this is not the day where you want to start picking tops and looking for areas to fall off. If we look at the overnight session, here, uh, it's showing pretty good strength. There's a weak high here. Look at all the volume that's trading near the high. This is likely to continue popping through. The rotations in the overnight session are to the positive side only. Why is this so high? Ticks. It's the same, I guess. Um, There are no negative rotations here. The bigger rotations are going to be to the upside, shorter pullbacks. Next rotation is going to be bigger to the upside, shorter pullback. Just try not to stand um, in the way. And I know your RSI and your stochastics and CCI and all these things, all these lagging indicators are probably showing above 80%, above the overbought line, and you're itching to catch that short. But remember, the market on those indicators that are based on averages, the market can continue to move another 30 points, and those 30 points are not going to move the average all that much. It's going to continue to say it's overbought, even though it continues to move higher. So just caution there if you're not all that familiar with how markets rally sustainably like they've been. So that's that. The overnight session is telling us that there's no interest in exploring lower. They did not test the LVN lower from yesterday, right beneath us at 73 and a quarter, and it's holding a bid. So that's a shot across the bow, or in other words, a warning to anyone looking to pick tops this morning. If you want to pick a top, that's great. Just let it fail first. Let it fail. It's a dangerous play, so let the market coach you into it rather than trying to predict that it's likely to happen. Here's the profile chart that I've been talking about over the last week or so, I think, showing us what we've done since the early December. So this is taken from December 13th, and I've been talking about how consolidated this is and how high this kurtosis or sharpness of this profile is. This histogram is. Remember, a profile is nothing more than a histogram that's standing on its side, and the point of control of this histogram is 2265. And look at where we have launched from here. We tested down to 62, and we've launched away from this area, and this is what makes this dangerous to short, is because there's just a tremendous amount of volume that went into this, and it can continue to dissipate to the upside. Just keep an eye on that. I don't have a clear I'm not a fan of the current conditions, okay? So I'm going to tell you up front that, as I've always said, I'm not a fan of rally days. I'm not a fan of persistent buying days. It doesn't give me very much to work with, in addition to the fact that there is no profile here. There's no profile to work with. There's no history. And so these are the types of days where I stay reserved and just bide my time and look for rotations to trade against. This is a type of day where I'm more heavily applying the information that I'm releasing to you today in this next video about order flow scalping. I have to fall back on more rudimentary instruments to be able to trade this kind of market. It's not my favorite. So I'm going to leave you today with some simple, just classic kind of hypotheses based on how the auction normally proceeds, and that is, today we're likely to see an open auction out of range. We're likely to see an attempt at regaining the range. It's likely to leave a gap or test by just a few ticks, and then we're looking for it to find a base and continue higher. I expect the VIX to continue to drop. I expect the range to be very small, and that gives us hypo 1. So open auction, test lower, and then continue to push higher. Continue to squeeze shorts to the upside into new high territory. That is the path of least resistance. There's nothing up here. And so there's no reason for the bulls not to be bold in this environment and to continue to push higher. Okay, the secondary hypothesis: open auction again, breach that overnight high, make an attempt at the high, push lower, and then move back into the range. This is unlikely, but this would give us a better opportunity. And then I'm looking for it to bounce and move back towards the new all-time highs and hold here today. The hypo 2 is a better stance to be in. but it's less likely that that would happen. But this is what I'm looking for. On the third hypo is we get a dip immediately responsive. The overnight inventory is long in volume and in price. So we get a dip back into the range. Look for a test all the way down to 22.73 and a quarter, and then an attempt to push out later in the day. This is a much harder plan to trade because um, you're not likely to get a good chance at getting short, and you're not likely to get good rotations on pullbacks to the short because they're risky in this stance. Um, to pick a short and ride it down into the low volume node below. We'll see what happens here, but that's as much as I can give you at the moment. There's the video that was promised yesterday. There were some technical issues. I had to stay up late to produce it. But if you've joined the mailing list that is on in the description of this video, if you're already part of the mailing list, you will get a video today with a private link to view it. It is about execution using depth and order flow. I've got to admit that it wasn't the best example that of what I'm talking about, but at least it puts it out there. The video is overdue by about 5 weeks since we did the webinar in December. So look out for an email at some point that gives you a private link to view that video, and you can comment if you've got questions about the video. Instead of doing a webinar, I decided to go the video route. It's less difficult to manage. And if you've got questions, just leave a comment under the video and I'll do my best to answer. Good luck, and I'll catch you tomorrow. Remember, risk comes first today. Do not get emotionally involved with your trading, okay? Good luck.